Hey, what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live here on YouTube. As you guys know, chat's open. Feel free to drop questions, comments, stocks, stuff you want to cover, whatever it is. We'll make sure we get to it on this episode. Crazy week. Really, really good follow through from the follow through day that we had last week, and we're kind of looking at over the weekend. And a lot of stocks making some good moves. So, quick historic rebound. We'll talk a little bit about some of the possible records we may be moving towards. But without further ado, it's time for the rapid review. All right. As you guys know, there's the disclaimer on the screen. Read it. Informational and educational purposes only, not financial investment or trading advice. All right, let's get started. Market, looking at the trend. So for me, I have my stance as an uptrend. I have my exposure levels at 80 to 100%. With the moves that were made this week, and we'll talk a little bit about it when we get over to the actual index charts. It looks like there is a ton of institutional buying coming into the market. A lot of key levels that were overtaken, and that is what has brought me to that 80 to 100% exposure levels. Looking at the Webby 3-day trend, which if you don't know what that is, check out Mike Webster's YouTube channel. He goes pretty in depth into it. That is both uptrend on S&P and on the NASDAQ. And then looking at my 50-day moving average trend, still sitting sideways. This is a little bit more of, I would say, like a lagging longer term outlook on the actual trend. But this is just still sitting sideways. Pretty soon I'd see us turning around if we could start to see that 50-day start sloping upward. Looking at the rally, like we said, we had the follow through day on the S&P last Thursday. So we're 13 days into this market. And then looking at the NASDAQ, we had a rally day occur on, where are we? Sorry, we had a follow through day occur on the 14th. So that was a 10th day follow through day that happened on the NASDAQ. We talked a little bit about that, and I'll bring it up again where the same day that we had the follow through day on the S&P on the 8th, we didn't technically have one on the NASDAQ, but a lot of the price action was follow through day like. So whereas Webster says a follow through day in spirit. So looking at the index performance for the week, the S&P up 4.54%, NASDAQ leading out the week up 6.84%, Dow 3.19%, and the Russell small caps 5.56%. The big thing, closing range, really, really strong, aside from the Dow, which was the laggard for the week. No surprise there, not too concerning for us. But you have the NASDAQ closing in the 97% range, S&P closing in the 94% range, and the Russell closing in the 90.5% range. So closing again at those highs of the week, 2 weeks in a row with some really, really strong closes into the weekly bars. Really, really positive action to see that. Again, now we're green on all for year to date with the S&P up 2.83%, NASDAQ up 3.71%, the Dow up 1.51%, and the Russell up 9.57%. Moving averages, green on all moving averages. We will start going a little bit more into this when we get over and take a look at what is going on with the charts. But you can just see, like I said, green on all. The only really switch from last week is that the Dow reclaimed its 50-day simple moving average, but other than that, not much more else to add. We'll look at distribution days. So for the week, we wiped out all remaining distribution days. We had talked about last week that these days would likely expire due to time, but even more of a positive thing was we had all these days, as you can see here, expire due to price action. So we had a really, really strong moves, as I'm sure everybody knows, wiping out all these distribution days, bringing us to a zero count. With that being said, those were all what I've been calling legacy distribution days that were acquired prior to the follow through day. And, but still, needless to say, good to see everything kind of zeroed out, start nice and fresh and clean, and we can now have a really good look at what's happening after the follow through day. All right. News for the week going into next week. Where are we? Where are we? Nothing going on. No news. Nothing to really take note of there. And then on the distribution, on the earnings side, we'll let that load. But earnings are starting to pick up. We're starting to see some of these more names reporting, financial companies and things start reporting. We'll let that load. While that loads, let's jump over and let's take a look at the indexes. All right, so as we always do, we'll start off on the daily on the NASDAQ. This is just straight up vertical movement off of those bottoms. We have the rally day here. This was, the day 0 of the rally. Then you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 consecutive up days in a row on the NASDAQ. When I talked about the record. So this Friday brought us into second place. It was the summer of 09 was 12 consecutive days up in the market. Bringing this now at 13 puts us in second place for the most consecutive up days on the NASDAQ. The leader, the number 1 spot, is held by I think it was 1979. There were 19 up days in a row. So still would need another whole strong up week next week, and then going into the following week after that without a single down day, which would be insane. But just this in and of itself has just been straight off the bottom, up day after up day after up day, which has been really, really positive. We're seeing a lot of the above average volume coming in around here. No downside volume, no distribution days being acquired in this process. All super, super positive action to be seeing that happening. So, yeah, the fact that we are just skyrocketing up, the fact that we're seeing a good amount of volume coming in, up day after up day, blowing through the prior highs. This was the all-time high over here on October 29th, which in the past, 3-4 months, we've talked about that point very much. This peak here we blew through. This area over here we blew through. It was just straight up vertical. We had no resistance at the 200, no resistance at the 50. It was just like pedal to the metal, all systems go, straight up, right off the bottoms, which seems to be happening much, much more in, I'd say probably in the last 10 years, that the market just seems to rebound at a much, much faster rate than it did historically. More of those V-shaped recoveries. But yeah, super, super positive action. In terms of the moving averages, really right now, the only thing lagging behind is that 21 EMA down here as it's starting to slope up. But you can see all the moving average now sloping upwards. We're looking, we have the 10, the 50, came right into that 200, skirted right above it, and then kind of started turning away. And then that 21, like I said, just seeing that cross above that. We'll have all the moving averages stacked in the proper order. Not necessarily like an indicator that I really, really use. It just helps define the trend that we're in. And when they're all stacked up properly, that's definitely a positive sign. We've been holding those lows above all those moving averages, which has been very, very positive. Really looking at everything from the rally low, there's almost nothing negative to really even talk about. Right even around here, right, we had on Thursday where we broke those all-time highs, and then we kind of we're sitting there. Like I was talking about, like we might see some kind of pause right around this level. We might even see the pullback coming in there, and we didn't even see that because Friday just jumped up again with more volume and than the prior day. It just, this market just keeps ripping higher and higher and higher on good volume, which is super, super positive. We talk all the time about, you get the follow through day and you want to see additional follow through. You want to see the market continue to prove itself. And this is just like textbook, like no question about it. This market is just following through and doing so in the proper fashion, seeing those, good closes as well. right? We have a high here, a high here, high close here. This even, right? We opened up, we kind of rolled back down and then opened and closed above the open towards the top range, closing near the top range on Friday. Uh, it's just there's almost like it's hard for me to sit here and try to find an area of weakness in the what's been going on since we've rallied from the bottom, which is super, super positive. Now, I'll talk about this when I go a little bit more into exposure levels. We do know, though, there's going to be a pullback, right? The market just doesn't go in one direction. There's going to be, at the very least, a pause or a pullback or some sort of stall where we're not going to be green every single day. And that's something that I'll talk about a little bit more in exposure levels on how you should be handling it. But once again, it looks like, if you were able to get in on this follow through day, where am I on the follow through day? What was it right here? Is the follow through day? I think we had, no, it was Thursday. 1, 2, 3, 4, 5, 1, 2. Was this it right here? I'm mixing it up, but when we had that strong action, right here, right? Yeah, right here. Sorry, Wednesday was that follow through day. When we had that kind of big pop again, it wasn't necessarily a follow through day because the volume was lighter than the prior day, but we still had that big gap up through those moving averages. Really, really strong move that it was up against this really, really high volume day on Tuesday. Which even that, opened, rolled over, found support, and kind of rebounded, metal resistance, and blew through it. So it's just a lot of positive action happening in the indexes. But this is why, and really kind of the same thing happening here. Not going to keep going into this, but this is why it's so important when you get, and here's the official follow through day. When you get that follow through day, I don't care how you feel. I don't care what's going on in the news. I don't care what your friends say. You have to trust those follow through days. They do fail, yes. But if you start picking and choosing what follow through day you're going to use based on whatever else is going on, you could find yourself quickly sitting on the sidelines when the market goes on without you. And I'm sure there's plenty of people out there who saw this follow through day and we're like, all right, here's, this kind of dead cat bounce. We're going to pull back. Then we're going to come here. Then the market keeps going. They're like, all right, we're eventually going to pull back. We'll pull back at the all-time highs. We start getting towards those all-time highs and we blew through that. And it was like, you keep waiting for that pullback to happen now. And the market just keeps going on without you. And now there's just a lot of extra risk that we're on new buys when we're so far extended as we are right now. And that's why getting in on that follow through day is that perfect sweet spot of not just buying every single like positive day, like something like this, or every single up day that we have as we're rolling over, but seeing the trends start to turn around, seeing us get that rally, get through those 4 days, and then see a real significant move. There's a reason that day works. It gets you in every single bull run. Again, they may fail, but that's why you allow the market to kind of pull you in slowly. So, yeah, hopefully you were making some buys on the follow through days. You're continuing to follow up and slightly increase your exposure, and now you're sitting pretty. All right. Yeah, we'll definitely go through those stocks 100%. Thanks for dropping those in there, guys. Other than that, though, not much else I want to say on the indexes. We'll look, actually, let's just look at the weeklies. I mean, come on now. Look at that. Look at that. 3 weeks in a row, just closing near those highs. Volume just increasing week by week by week. This was a holiday week, so keep in mind that being that lower volume. But like just straight up from the bottom, beautiful, beautiful closes. Volume increasing, above average volume this week. I mean, you don't get more clear than we're seeing right here. So, yeah, beautiful, beautiful, and seeing the same thing even on the S&P. All right. So let's jump over and let's start looking. All right, that never loaded. Oh, there it did load. Okay. Well, here, going back, you can see earnings really starting to pick up. This list is going to get really ridiculously long. But just the fact that you can see there's a lot of earnings coming in. But really what I want to start going through is let's start going through top down. Let's look at the sectors. On the sector side of things, so energy's still leading, right? Energy was really, really strong. It's still leading. But when we look at what went on for the week, energy was a laggard. down 3.4%. The leader for the week was technology and consumer discretionary, and we saw that pretty much day to day. That continuing to be the case every single day. It seemed like these two sectors were leading out the week. So we're starting to see them. Flip this. We're starting to see consumer discretionary slowly climb its way up, but technology just made a big jump. Super strong jump. So sitting in that number 2 spot and likely coming for the number 1 spot. That is the sector to talk about right now is technology. And like I said, second one that I would say I'd be watching is that consumer discretionary. With the Webby trend that I apply also to these sectors just to kind of take a look at. The only other ones that I would bring up that are looking like maybe showing some real positivity. Communications, definitely, like I said, consumer discretionary, financials starting to turn around, materials for sure, and industrials for sure. So, but technology being where I think the main focuses should be. Let's look at the industry group rankings and let's look at the leaders for, this is for the day. Let's go to the week. All right, let's look at the leaders for the week. So quantum, really strong. But with that being said, quantum has been in a pretty significant downtrend. So the one strong week doesn't make it necessarily where I'm like, okay, here it is. But I mean, that is just a massive move by quantum. So we want to see that get into a sustained uptrend, then give us some sort of a base type of entry, but still something to take note of. Blockchain, crypto, a lot of the crypto mining stocks showing a lot of strength this week, someplace to pay attention to. Then we got the LiDAR and like computer vision, spatial computing, all that kind of stuff doing well. Some software stuff started to show some strength this week, but I think a lot of where the strength came in this week was in the AI software, AI platform, and stuff like that. Cybersecurity perking up as well. And on the losers for the week, pretty straightforward, right? It's the energy. It's a lot of the oil and gas that have been really popping and showing a lot of strength that are now lagging. Not surprised there. So looking at the current rankings, scroll down a little bit. I like to really focus in the top 20 for myself. The AI data centers and networking has been really super strong. Looking at the stocks and those names, I see Fensuka. So you want to look at that AAIO, and I'm sure a lot of you guys have been seeing a lot of these names on your watch list if you don't actually own them. Memory, those names have been we've been talking about these names for weeks now. Satellite, you can see those names up there. GSAT was announced that a possible acquisition by Amazon. I bought that not realizing that was what the catalyst was. That was my fault, so I did end up selling that. But yeah, so you have, and then like the space economy. A lot of what we're seeing within these industry groups is the AI theme and the satellite and space theme. Then you're also seeing the lithium and the battery and a little bit of the EV type of theme falling in there too. And then the final thing is the rare earth metals and minerals and mining. As you can see that kind of through here, you have silver over here, copper, gold miners, special metal alloys, all kind of in here. The reason I do love my ranking system is it's quick enough to kind of identify when this stuff is happening fairly quick. Like as you see, this is not flooded with energy. And this was showing some strength like right before the follow through day. A lot of these groups were already on here. So, and then I also have this velocity thing over here kind of showing what is really making some quick moves, like AI GPU accelerators up 22 spots in the last 4 weeks. You can have the electronic contract manufacturers, EMS, up 10 spots, space economy up 10 spots. So yeah, the really happy with how this, I spent a lot of time trying to build this out, and it's definitely, I feel like, highlighting a lot of what's going on in the market that a lot of us swing and position traders really care about. All right, let's jump over and take a look at Deepvue. For those of you who don't know, I'm a Deepvue partner. This is the tool I use for all my stock screening, looking at my fundamentals and chart analysis. And well, there you guys can see. You can see all the stocks that I own, so I don't have to have to repeat all that. So this is everything that I own currently. But what I wanted to do real quick over here was jump over. We'll look at the sector tracker real quick, and we could just start seeing what's going on. So that tech stuff. Let me roll this down a little bit. Right, tech just very much like the market, skyrocketing off the bottoms, hitting all-time highs. Consumer discretionary, working its way up there, kind of hit this clustering of price action here and then kind of got rejected. Communications working its way towards all-time highs. Real estate completely rebounding and turning around. Financials trying to kind of make its way up, but still lagging. Industrials, healthcare. Healthcare had some pops and some strength there, but we're still below the 50 over there. Consumer staples not really doing that great. Materials looking like it's kind of got some nice tight action as it's forming the right hand side of what is probably a base. And then utilities looking weak. Energy completely collapsing through that 50-day simple moving average, clearly weakness there. So there's your quick rundown of what's going on with the sectors. We'll do a quick look at the ETF tracker. I've been kind of focusing more on my industry groups as a better look at what's going on in the market, but I do still look at this just to see if anything does pop up. There's your blockchain kind of coming off. There is your hydrogen. Hydrogen, not something that I should probably look at that, maybe getting that involved as well. But hydrogen breaking out to those all-time highs. And a lot of these Bitcoin mining, you can see they're just starting to kind of turn around right here. Software got hit a lot, trying to make that. We want to see that start uptrending. Digital payments, cloud computing, semiconductors, just absolute tear. Very, very clear strength in the semiconductor space. Travel's another group that I think been seeing some strength in for sure. Seeing some of those airliners, transport. You've been seeing some of the shipping stocks starting to bounce and rip. So travel tech, there you guys go. What else? Artificial intelligence, AI, just completely ripping. Quantum. Okay, here's quantum. Quantum ETF, completely ripping. But when we go, let's look at some of these themes. Okay, so some of the quantum names form looking really good. Some of them kind of coming off the bottom. So just keep in mind, there's been some real big movers in these groups, but some of the like pure play quantum computing companies still have a lot of work to do, as you guys can see right there, but definitely worth taking a note of. I think with the ETF, a lot of times when the ETF probably has a heavy weighting in like NVIDIA, heavy weighting in Google, and that's what's having it have shown so much strength. Form looking though like one of the leaders in there, as it's just continuing to trend higher and kind of broke out of this really, really small flag pattern that we have over here. All right. What else? Daily theme tracker. Actually, let's go to the 4-time theme tracker. And we can see what's going on here. Year to date, we're still lagging, and that's going to take some time. Even 3 months going to take some time. But in the 1-month time frame, Bitcoin miners, semiconductor, telecommunications, quantum, a lot of what we're seeing. Just a good visualization of all of that. All right, so let's jump in. Let's talk exposure levels real quick. Let me get that out of the way, and then we'll start jumping into some of these stocks that you guys are putting up there. So from an exposure perspective, 80 to 100%. And the biggest thing that I want to make sure I say is we are continuing in this. If we continue in this vertical lockout type rally, every single day that we go up, the higher likelihood that the next day or the next couple days is going to be that pause or that pullback that we are eventually expecting, because it's just the market doesn't go straight up. Now, with that being said, if you are the person who poo-pooed this market, who's like trying to sit out and things just kind of got out of the way without you, and now you're kind of sitting there with low exposure looking to make new buys, it's going to be frustrating, because you also don't want to put a ton of new exposure out right as we get a pullback. That's how you get stopped out of a lot of stuff. And then next thing you know, you see your portfolio is down and everybody else is up, and you're wondering, what the hell am I doing wrong? This doesn't work. So hopefully you're a person that had the follow through day, listened to the signals, started buying. And then each kind of day after that, you allowed the market to pull yourself in. You took some of the opportunities that were out there, and you were able to get yourself to that, 80 to 100% exposure level. But if you let your emotions kind of play into it and you decide to ignore the signals and trade on your thoughts, and no offense, but think you're smarter than the market, you may find yourself underexposed and be trying to play catch up. And I know that's frustrating, but don't compound a mistake by now going from maybe 20% exposure, 30% exposure, and on Monday at the open, putting on 60, 80, 60, 70, 80% of your equity into the market right at the open. And then let's just say that happens to be when the pullback happens. And the next thing you know, you get quickly stopped out of everything and you just see your equity take a quick drop. That's where a lot of underperformance can come from. Hopefully things can pause and give you a chance to get back in. But just be very cautious and selective of putting a ton of exposure to work very, very, very quickly. And this goes for really at any time, even when the follow through day I allowed it to kind of pull me in over a couple of days. But that's, I think, the biggest piece of advice. For those of you who listened to the signals and saw the follow through day and started putting money to work and allowed the market to pull you in as the market continued to show strength, stocks continued to give you entries, you're probably sitting pretty. You're probably looking at your portfolio and feeling pretty happy. Don't allow that confidence and that happiness to make you break away from your rules. Don't think you're smarter than the market, like you have it all figured out. I'm a genius. We're just simply following the rules, following the probabilities, and it worked out. The coin flipped and it landed on heads, and that's what we bet on. It's not necessarily that we're clairvoyance and that we were able to predict what was going on in this market. We're following the rules. We're taking probability bets, and things are working out in our favor, and it's a beautiful thing. But make sure you still stay disciplined. Make sure you're not over trading. Make sure you're not, chasing things thinking that, oh, this thing's going to keep ripping. I don't care. I'm just going to buy the super extended or buy something that's in a downtrend because you think you're right. Like, just continue to follow your rules. That's what has got you to the point that you're at. Continue to follow those rules. Continue to audit your mindset and make sure you are staying focused and you are not letting your mind kind of sabotage you, because as I'm sure many of you know that are have read a lot of psychology books on trading, it's very rarely the proven trading strategy that you are trading that is the downfall of your trading. It is more often than not your own self-sabotaging and your own mindset and psychology that hurts you. So it could work on both sides in this situation. It could be the frustration that you haven't got into the market. It could be the exuberant feeling of how great you're doing and how you were able to buy on that follow through day and ride this now quick rally. Don't allow either of those to negative affect you. Understand, feel those emotions, take a reset, do your work on the weekend, have a plan going into every single market day, and just execute and follow to your rules. And all those little kind of steps and little moves that you're going to make are going to be what makes you a successful trader long term, because it's not about just that one stock. If you want to do this and you want to actually be successful, it's about years and months and everything of consistency and overall success, growing that capital, and proving that you can do this consistently over a long time. Because anybody can flip a coin and catch a big winner and think they're a genius, but doing this consistently is important. As I say that consistently 20,000 times. All right, cool. Let's jump back over to Deepvue now. And let's start going through some of these stocks you guys got up here. Let's start out with AAIO. All right. So with this one, right? Leading stock, leading industry, super strong relative strength in this name, great fundamentals. I mean, this stock is just beautiful, right? Really, really beautiful. And it broke out pretty much right on the follow through day, and has kind of gone up. It had a little bit of a pullback, and now it is gone up again. Very, very high ATR stock, 14.14%, super high ATR stock. For me, if you own this, absolutely beautiful, right? But let's see where we're at right now. This is my concern right here. If you're talking about this for a new buy, a simple pullback to the prior low 3 days ago is a 16.28% drop. That is, that's a huge, huge loss to take on a position to have a stock pull back to what would be an absolutely perfectly healthy pullback. Even, let's zoom in a little bit. Even if you just pull back to about the 10-day, just to the 10-day, you're looking at 12.35% drop. So as strong as this is, if you're in it, absolutely beautiful. But I mean, if you look at this on the weekly, and this is something that I suggest a lot of people do, like looking at it on the weekly, because I know what some people do, right? They look at this and they like look at these couple of really, really tight days. There's a difference between tight days inside of a pattern and tight days on an uptrend extended out of here, right? Yes, if this was inside of a bigger base, this would probably be like a really, really good spot to look at, like, whether you want to call it a wedge pop, whether you want to call it a pullback, whatever the hell you want to call it. But when you're buying something fairly extended, this is not enough consolidation. This is not enough consolidation. And that's why I like looking at the weekly, because now you look at the weekly, like look how clearly extended this looks on the weekly. So if you're in it, beautiful. This thing is looking great. And if you're not in it, unfortunately, in my opinion, you really should just be waiting. It may go on and keep going, but the risk is just the risk reward situation right now is just not there for a stock that's extended as it is. Yo, what's going on, Chad? All right. Now let's go in on ONDS. Oops. ONDS. Let's do exactly what I said. All right, weekly. So starting to consolidate, right? For you CANSLIM traders, the quarterly sales are beautiful. Loving the sales. Earnings not that great, but we've seen many, many times, as many people I'm sure know, is that these sales can really, really be a powerful mover. 1 month RS is really, really not that great, but 12-month is good. What does this do? I forget what this does. Wireless drone and automated data. Smaller name, smaller cap. What I should really get here is the dollar volume on here too, so we can kind of look at that. Building a base, but looking at the daily, look, I like that these moving averages are really tightening up. I like that we're starting to work its way up the right-hand side. The big question I would ask myself is this a leader, right? Is this a leader in a new market? Especially when we're coming out of what seems like a new bull market. I want to make sure I'm in the leaders, especially. I'm not looking so much for those smaller, little swing trades. I'm looking for those big leaders of this next market, because it becomes so clear in things become a little bit clearer coming out of that turnaround. So why chase things that are, not those leaders? So I see, I mean, this is definitely a name to pay attention to. It's starting to base. We do have just eyeballing right there. Potential resistance level here. So, I would like to see this kind of, I guess you can consider this like a high or low coming in here, but really not, because it's lower than this. But I would like to see this kind of start to build up the right-hand side, and start to, at the very least, maybe look to breaking through this level and maybe some tight action right around there before I would enter something like this, me personally. All right. SKE. All right. What does this do? $33. Gold, silver, copper deposits. All right. So we're in that leading group. I like seeing that, right? We're starting to work up the right-hand side here. We had Friday, what was a break above this kind of a couple-day pullback, breaked above, but then kind of rejected right there, and closed back into that level. It is kind of riding up the right-hand side. Same kind of thing here. I would like to see something kind of pause, pull back, and give me kind of an area to enter. I don't really see where the entry point would be on this unless you're looking at a more of a base breakout and looking towards the top over here. So that would be my thought process there on that. But I love the industry, and this is definitely where I want to kind of be playing ball. IPGP. That did not go where I wanted. IG. What is it? IG. Oh, IPGP. My bad. All right. This is this in that like kind of LiDAR type of sector, I believe? Yes. Okay. So, and again, leading group, love to see that. Like to see that this is kind of based out. A little more cleaner of a pullback, and then now starting to go up the right-hand side. Where with here, kind of same kind of thing. Like if we're looking at like maybe even breaking these highs. Let's see what this pullback is to here if we broke out. All right, so if we broke out and kind of pulled back to a normal action there, it'd be kind of like a 10%. So possibly something you could look at. Like if we did, one of the things that I've been doing personally, especially in this type of market with how rapidly they're moving, if we get like a gap up, like as we've seen that happen where some of these names just gap up through that range, and then I'll kind of watch a little bit on the intraday chart. If we take out like that first, maybe it's the 15, 30, depending on how I feel about the stock, take out the high of that, I'd be willing to enter, but using the low of that kind of gap up as my stop. So that's something that you look for. But yeah, I mean, same thing. I think this is it's in a leading group. It's got decent fundamentals. It's not crazy high ATR. So overall, I like this name. I would at the very least, you want to see it take out this area over here. And then your stop's going to have to just be a generic stop that you use, knowing that you may get stopped out as it pulls back into that kind of little sideways area. But what else? HYMC. Boy, HYMC again on Friday. Okay. On Friday, right through here. Okay, so let's see. Another mining name, another leader in that gold space. Let's see. Kind of right at, I don't even want to call that a resistance level, to be honest. Just kind of trending upwards. Let me know what your entry point, like what triggered you into this. Was it these 3 days that were kind of tight? Not really any inside days or anything. I don't know if that was what we've been kind of just trending upwards here. Just kind of trending up. So let me know what triggered you into the, as that was the buy. Was it just breaking above? Because of the longer trend line of HYMC. Longer trend line. On the downside, let's see. Maybe here. That's kind of steep. From highs to highs. 1, 2. Yeah, I would have to see a little bit more. Yeah, I think it's the mining is good, but for me, I just don't see like what triggered me into the entry on this one personally. Again, we all trade differently, and you might have a different rule for entering that. And feel free to kind of further explain. I'm not really 100% sure what you mean by from highs to highs, like from here to here. The lower part of the middle one. So kind of taking that one pop. Okay, like that. See, this is where, like, obviously, depending on how people look at things. Okay. All right. Yeah, not too bad. I see what you're saying, because you kind of X this out and just said, all right, like this was just an anomaly. We kind of saw resistance to that downtrending line, and then we popped and broke above that. Okay, yeah, cool, makes sense. Like almost like kind of flagging action even here. Oops. Like that, and then popping above there on high volume. Okay, yeah, I see what you're saying. That makes sense if you kind of take that out there. Yep, cool. Dell. Everybody been talking about this one. We got to go on the weekly to look at Dell, because that was the big talk, right? We had this weekly. Oops, wrong line. My bad. All right, so we had that line coming across here. So this is the weekly, right? I wouldn't call this really a handle right here, but if we go into here, right, on the daily, you saw that we climbed up, we broke out, kind of pulled back here and gave a couple day little handle right here. And we just been seeing a lot of tight action around here. I was very, 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 very tempted to buy over here, but I ended up buying. Did I buy? I forget what I bought instead that day. That put me at 100%. But I mean, this is, multi-time frame breakout, high volume breakout, all-time highs. We did get even to like some here. You were able to, I think, a reasonable CANSLIM style stop in this kind of clustering right here. I know some people that might have bought right around here as it kind of like bounced off of this and kind of bought off the bounce of the 21. I think there's a lot of different tactics people use to enter this one, but yeah, no, this is one of those big names that I think a lot of people have been talking about, and the fundamentals look good in this name. Multi-time frame base, some tight action right around those all-time highs. No, this is, as you can see, this was on my spotlight list, that red. Just went with something else. So I wouldn't say model book. Definitely not model. This is why I wouldn't say model book, to answer your question, right? That's oops. There's real no handle. Like, all right, if you're looking at this as the cup, model book cup, right? Model book cup right there. 30%. We had the uptrend here. 153. Uptrend, cup. But there really is no weekly handle for like a CANSLIM model book cup. This is not, I wouldn't say cup with handle. So if you're looking at this, the 33% pullback, like that's not a handle. That's a pullback. That's a breaking moving averages base. There's some volume accumulating in here. So for me, I wouldn't necessarily call that a model book cup with handle. Well, can it be a model book stock maybe at some point? Maybe look at the daily. On the daily, you could probably argue this being like some sort of like a cup with handle type of thing. I've really, over the years, I've just tried so much to not get so caught up into the terminology and, oh, this is a textbook, meets every criteria type of thing. Like, I try to simplify it. I try to talk. You got essentially three things you're looking at on the axis of a chart, right? You're looking at time, left to right. That plays into what's going on within price action. And then you're looking at a support level a support level on the downside, and you're looking at a resistance level on the upside. That's essentially what all this technical analysis really comes down to, is time, support, resistance. And that's what all consolidations are. That's what all these patterns are. And then the nuances between a cup with handle, a flag, a double bottom, they all have different trader psychology or market psychology that's fueling that behind there, right? And ways that stocks tend to act because of how the pattern and price action is, right? The cup with the handle, the cup, the double bottom, the flat base, the flag, all these things. There's different psychology playing into why that pattern is forming. But to me, at the bare bones of it, they're all some sort of consolidation over time, some sort of area of upside resistance, and some sort of area of downside support. And if you really look at a lot of these charts, that really simplifies a lot of what's happening. And if we're looking at here, right, we're seeing here's the upside resistance. The downside support is, I would say, somewhere around, this was just like kind of a big base that formed that kind of support. The time frame was very, 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 very long, which is good. We saw then inside of here, we hit that resistance, started to kind of go a little more sideways. You talk about volatility, like all these things. But I try to keep it simple. So whether you want to call something, well, this is the handle, this is not the handle, this doesn't constitute a handle, and people can sit there and argue over everything. The main thing of looking at Dell is it's been showing great relative strength. It's got good fundamentals. It's broken to all-time highs. It has formed a big long-term base here. It ran up and formed another base inside of that bigger base. And then things kind of started to get, if you look at it on the daily, things got kind of a little tighter up here. But it's not much more to say. At this point, though, I think Dell's gone and extended. So I wouldn't be looking to, again, right? If we get a normal pullback in the market, it'll break down back into this area, and I think right here it's extended. And even if you're looking at from the CANSLIM kind of breakout area, let's say even if you went from here to here, it's 11%, which is extended from a CANSLIM perspective from here to here. You're outside that 5% that's extended from that perspective as well. So gone, extended. Hopefully, if you got it, great. If you didn't, wait for something to form. Got to be patient. There's plenty of, we're not going to hold a ton of stocks. There's plenty of opportunity out there over time. Got AAOI on the follow through day. Also got COHR on the follow through day. Beautiful. Nice little pop. All right. And this is what I was talking about too. Those kind of like pullbacks and then pops, like, well, I guess you would call, if you want to call it a wedge pop or whatever, but happening inside the base and happening over much more time than happening on some of those other little small couple day pullbacks, and that not being it. But no, this another really, really nice buy, and buying those both on the follow through day. Beautiful. APH, currently watching APH. Yeah, I love it. Definitely a stock to watch. Fundamentals on this one overall looking pretty decent. Starting to build up that right-hand side. We'd like ideally to see as we start to get here, get some tightness. And this is what I'm talking about. Some people may say, oh, look, this is a double bottom. Some people say, oh, no, it's not really a double bottom. Some people, everybody's going to look at things differently. Some people might have bought because inside this base, they had these couple tight days and it popped above there. Some people might want to wait till it gets towards the all-time highs. Everybody's going to have different entries, but regardless, we got some consolidation. We got constructive price action. We got back above those moving averages. We're starting to trend upwards. We're starting to come to those all-time highs. And then whatever your entry tactics are to get into something like this, use those. But right now, ideally with this one, you want to see this kind of tighten up right around the all-time highs as it's starting to kind of form that pattern right there, and then hopefully give you some sort of handle, tightness, whatever, to kind of put your stop at. But if not, and you really do think this is the leader and you catch it right as it breaks all-time highs and you put a generic stop on that, I get that too. Same thing. Like you said, to build a handle, longer term trend line. We talked about that. All right, cool. What else? We'll go to my spotlight list. Dell's on there. Figs, I was kind of keeping an eye on this, right? Clear uptrend. Got this base forming right here. Really, really nice kind of cup-like pattern. 24% correction into this area right here. Healthcare, not super stoked about the healthcare kind of thing because I was talking about that, which is why I'm like watching it, but it wasn't something that was screaming at me to buy. But just the pattern looked really, really nice. I think that some people might have taken some early entries and possibly in some in here if they were watching this. But yeah, just keeping an eye on this one because I do like just the absolute strength we had here. Not really a true textbook, as they would say, high tie flag. But still 3 solid, strong up weeks in a row, consolidating right there with basically what was this, this was really strong in the beginning of the year, consolidating with the market and then starting to turn around with the market and show some strength. So this is a name I've been watching. It's on here just because of how strong semiconductors are, but not really looking. Circle, my IPO kind of thing. Looking like it's trying to start an uptrend. This is a stock that I know a lot of people made some money on last year. Looking like now we're starting to create that first higher low and possibly form some sort of base. It did, for those that were looking at these, like that swing trade entry as it was tightened up here and looked like it popped, it kind of got rejected. But definitely this is a name that I've just been watching for a while now. Analog devices. This was a beautiful, like this to me is like that beautiful, beautiful setup because you just have this nice cup pattern, really, really small, not that deep of a base. You had a couple week base because if you look at it on the weekly, right, clear couple week base. Never really got a weekly handle, but we saw some really, really tight action right here. Really tight action. We attempted to do that kind of breakout. We shook out just a little bit below that gap up low, little shakeout, quick rebound, which is really, really positive to see as we pulled back, shook out, quickly got bought right back up. We saw, and then made the attempted breakout, closed inside of that base again, and then really, really surged on Friday. So if you were able to get it even at the open, this is what I'm talking about. Even if you're buying in like that first, probably, let's just see what that first, let's go on the 5 minute. Even if you bought up here, why is this not letting me go down? There we go. All right, go back to the daily. So even if your entry, we'll delete this. This is what I like. This is this. Oh, Jesus, why is this not working? Okay, even if your entry came here on the gap up, the breakout, the take out of that first, what was that, like 15 minutes? I think it was. Whatever, close to like the first 35, whatever it was. Even if you took out like that opening high on the 5 minute, you can easily place your stop at that shakeout low and keep your risk pretty tight. So this was just this is what I love. It's a leading group. The fundamentals look beautiful. The relative strength is decent. Institutional sponsorship is good. It's decent ATR stock. The okay ROE. It's in that leading space, and it gave you this beautiful, clean textbook kind of breakout. And then it did so on really, really nice volume. So this was really beautiful. I didn't buy just because I have the SanDisk, the MU exposure. So to me, that this is more the lithium space. I didn't want to start getting too overly exposed in that chip space because I know that a lot of these names are going to kind of follow each other, even though they're slightly different, that if semis get hit, it'll get hit with it. So that's kind of why I just decided now to kind of have, I got something in the space world. I got something in the mining space. But that was why I kind of let that one go without me because I already had SanDisk and MU. While I have AEM up like this, I liked because it's super, super tight. I was able to put a nice big position on here and keep my stop very, very tight. I think I took it somewhere right around like these multiple inside days is coming up on the right-hand side. Or maybe I took it here. I forget. Regardless, though, leading industry and just trying to watch and see it's struggling to get up there. But I've been, as you can see, I've had multiple situations where I've tried to get down on this one and handled it improperly. So I'm trying not to get too impatient, um, and run away from this one when because it's not performing as well as some of my other names. Because like I said, the gold mining and stuff is showing some good stuff. Okay, yes, MU definitely showing some tightness. Did get rejected. Like we had like these 3 inside days right here, right around those all-time highs. This was looking really, really good. I talked about this over in Discord too. And even SanDisk, same thing, showing some tightness. More tightness after it's already kind of run up. This more of just a pause and a break, nothing that I personally would use as an entry, especially because we haven't even touched the 10-day. Obviously, it's more high ATR stock, but yeah, MU kind of right around that. It's very, very similar to what we saw with Dell, right? Just not necessarily squatting into the base, but kind of pausing right at the base kind of high area, which I like. Any other names anybody's throwing in here? Nope. All right. What else? I haven't done my full kind of screening yet. There are some names starting to report, like you see like this. Pretty interesting, right? Look at this one. Somebody might have bought this one as it kind of gapped up over here. That's gone and made a big move, smaller name. Giga Clouds kind of went out. I'm going to flip through some of my. This is just a bigger watch list. Not that I'm looking for entries on these or watching these super, super closely, but seeing those semis, man. The semis just want to keep going. Solar not really looking great. Insurance. You just chopping around. Lunar. AMD. God, was I wrong on trying to short this one? This is why you have stops, though, right? Like I thought maybe we were going to kind of roll over if the market was really going to do rough, and this thing just went vertical. So that's why you have a stop. I took a small loss on it. Thing went on without me. I didn't sit there and let my emotions play into it and be like, this has got to go down, because I would have got freaking annihilated. So AMD's looking real, real strong. Bloom broke out, and now it's really kind of just sitting nice and tight. So holding above those lows. This is another name that I would love to see really, really tighten up. And I know some people have some gap up entry rules for this too. I'm actually going to throw this on this just to keep an eye on that. What else? What did I miss? What are your top 5 books? Ooh, top 5 books. All right, let's do this. You know what? Let me just click through this quick, and we'll talk top 5 books real quick. See if there's anything else I want to bring up from last week's list. DigitalOcean, man. This still no real entry to me. I want to see this give itself some more time. This one was watching as well, but seems like Rocket Lab is more of the leader in that area. All right, let's go full cam on this. So, all right. Top 5 books. All right. Number 1 is obviously going to be How to Make Money in Stocks. 100%. That book is it's the Bible. And the big thing with How to Make Money in Stocks to me is it is the precursor to a lot of people's trading strategies. It also does one of the best jobs of giving you all the essential tools that you need to trade. It gives you risk management. It gives you technical analysis. It gives you fundamental analysis. It gives you understanding the overall market trend. It talks about volume. It talks about moving averages. It gives you like the basics of trading and trend following, whether you're somebody that ends up transitioning to maybe a short-term swing trader or somebody that kind of transitions into something that's more of a long-term position trader, bordering on investor. It gives you the tools. If you're somebody that wants to go more fundamental, if you're somebody that wants to go more technical, if you're trading dailies, weeklies, even if you're going down to like a 65-minute chart, like you look at a lot of these traders that you see on Traderline, that you see in the U.S. Investing Championships, they all mention the book. There's a reason. And I was lucky enough to that be the first book that I ever read before I really even got into trading it. And I was absolutely blessed to have that happen. So that's clearly my number one. Number two, this I actually believe if somebody is looking into. All right, we're back. Can you guys hear me? I lost you guys for a second. Who's here? Did I lose anybody? I think we're still good. It says connection good. We're rolling. All right. Number two. And I think this might surprise people because a lot of people might not know about this book. And I believe that this should be the first book that somebody should read if they want to get into trading. If you know somebody that wants to get into trading, this should be the first book that you should give them. It's a new book. Peter Robbins just put it out. It's The Trader's Journey. He does probably the best job that I have seen of any trader in just laying out what it means to be a trader, what it means to learn to be a trader, and just the truth and the reality of the markets. But what I love about what he does is not only does he touch upon like all of the things, what it takes from the learning journey, what it takes in terms of the day-to-day work in order to become a trader, touches upon the psychology side of things. The big thing to me though is it's not tied to just one single strategy. Like it's not, okay, this is just about position trading. This is just about swing trading. This is just about day trading. This is just about investing. Like he even talks about like there's various ways that people can approach the market and there's no holy grail to trading. This book, I really do think if somebody has any interest of trading, you should be giving them this book because it does a very good job of like, this is what trading is. This is the reality of trading. This is what your journey as a trader, hence the name of the book, is going to be. It is a short enough book that somebody's not going to feel overwhelmed. It's going to be a quick weekend read. And and he actually asks as many times in the book, it helps people to reflect and actually ask themselves, is trading for me? And I think too many people get involved in trading, wanting the money, wanting quick profits, thinking they can make money without doing anything or barely working. And just, it's like a click couple buttons on my phone and just print money. This lays it all out there and lets person sit there and be like, do I really want to go down this path? So excellent book. And if you are somebody who is trading, I think it's very, very good as well to read this because there are certain things that like he talks about building your trading plan and goes into decent detail about that. And even for me, somebody who has built a trading plan, just seeing his approach to putting together my trading rules and my trading plan had me kind of tweaking some things and changing how I wrote things out. And just good things to remind yourself of and kind of even a mental reset for a trader to say like, this is the reality of trading, both from a actual execution and also a mental space. So that's my number two book. Let's see. I'll rattle off the other ones pretty quick. Darvis definitely in there. I don't know exactly what number I would put Darvis at, but I think that's another book that people got to read right off the bat because it does a very good job of laying out what a trader's journey is. It's super, super entertaining. And there's a lot of principles in that trading style that are clearly roll over into CANSLIM and a lot of other trading styles. So that's definitely number three. It's going to get much, much harder. Okay. Minervini's books, it's tough for me to really pick one. Trade Like a Stock Market Wizard is definitely up there. But Momentum Masters too. I have a real tough time picking between those two. I think Trade Like a Stock Market Wizards is a great book for it. Very similar to How to Make Money in Stocks. It gives you the rules and the approach to the market. But the reason I want to say Momentum Masters does such a great job of, I think, a lot of questions people have about trading from reading all the other books. Like there's a lot of things that people I've seen ask, or that questions that I had as I was learning to trade, and you're getting the perspective and the thought process from it's 4 different traders, 3 or 4. Now I'm forgetting off the top of my head, but you're getting the perspective from different traders. So that's one book that, and I don't see people talk about it enough. Like Momentum Masters is a great book to read after you've been trading for a little bit and you're starting to kind of get comfortable with the idea, but you still have a lot of questions. Number 2, I'm hoping it recorded. Number 2 is The Trader's Journey by Peter Robbins. That's a new one that's out there. I really hope that recorded, because I went super long into that one, and I really, really hope that people get that book. All right, so now my last one, right? So last one. This one's tough, man. I want to say Mark Douglas's books from a psychology standpoint, because everybody knows how strong I am about the psychology. Reminiscence of a Stock Operator, everybody knows it. A lot of people have read it. I'm not going to add that in my top, because I think it's just something it's a good book. The Market Wizards books. This is tough. The Trader Handbook is good. Oh man, this is a tough one. That last spot. I'm going to probably say, and I'm going to cheat a little bit, it's a toss-up between the Market Wizards books and the Trader Handbook. And the more, man, I can't pick between the 3. The Trader Handbook's great. It does a really, really good job, I think, of same kind of like giving you an overview of trading and different approaches to the market, and the process of learning, and it adds a lot of stuff that I think How to Make Money in Stocks does kind of leave out. So pairing those two together is an elite combination. So if you were to get How to Make Money Stocks and then also read the Trader Handbook by Traderline, those 2 books go together so well, and I think they kind of fill each other. The Trader Handbook kind of fills some of the gaps from How to Make Money in Stocks. That's definitely one. Honestly, if you read Minervini's book, How to Make Money in Stocks, and the Trader Handbook, those 3, that's like a really good like approach to the market, real strategy kind of trio that I think would be really strong. The Market Wizards books, I'm going to leave those out, because I think those, for me personally, as someone who reads like a snail, the audiobooks are excellent. So I'm going to leave that out. So then really it's the Mark Douglas books. Trading Psychology is huge. He does a really, really good job in going real in depth into trading psychology, open your mind a little bit about how to approach the markets from a mental aspect. So that's what it is. It's going to be How to Make Money in Stocks, The Trader Journey by Peter Robbins, Momentum Masters. I'm going to put that one in there as number 3, the Trader Handbook, and then your bonus book. Oh, no, sorry. What did I miss? How to Make Money in Stocks, The Trader's Journey. What did I say? Oh my God, I'm mixing everything up. Momentum Masters, or Minervini's books in general, but Momentum Masters is definitely one that I wanted to highlight. Darvis, that was the one. Darvis and the Trader's Handbook. And then the bonus is Mark Douglas and audiobook, all the Market Wizards books. All right. My bad. Yes, definitely Darvis. All right. Cool. That was a good question. Thank you. That was fun for me to do. Hopefully that wasn't too boring for people. All right. Let's close this out. I appreciate everybody joining. A lot of fun this week. Hopefully this was helpful for everybody. Look, if you aren't that well exposed, like just bust your ass this week and really, really dial down a good, strong watch list. Be patient, but do a lot of work and prepare yourself for the next week. And really check in on your emotions, both if you're really doing well and also if you're struggling and feel like you missed a little bit of the boat. There you have YouTube, X, link in description. If you're interested in Deepvue, like I said, Deepvue partner, link in the description. The other thing I also have is there's now a free month trial code, and you have the 12-month off code. 12% off, not 12-month off, 12% off of an annual code in there. So you guys can check that out and get a little discount. So use the link and the code together. We'll get you those discounts. Anytime. I appreciate this. Thank you guys for joining. And other than that, that is all I got. Stay disciplined, everybody.